Hello guys. So this is Shafiq from Academy. All right. So today I want to share a little bit of what I have learned from Mark Minervini's book, which is Think and Trade Like Market Wizard. All right. So this is a very interesting book. He basically explained his approach and his trading strategy, how he find the super performance counter to trade and to to invest, and his technique of how he buy and selecting counter, how he buy and how he exit his counter. All right. So all of this, right? Probably we can start with explaining uh, SEPA. Okay. So what is SEPA? SEPA is basically specific entry point analysis that have been have been created by Mark Minervini. So he said to use this approach, what he look at is basically five things, which is trend, fundamental, catalyst, entry point, and exit point. All right. So let's go first with the first point, which is trend. Okay. So how Mark Minervini understand trend is basically he understand that in a whole in a primary trend, right? It's basically in a trend in a chart. Basically, there is four stage of trend, right? So we have stage one, which is neglect phase and consolidation. Stage two, which is advancing phase and accumulation. Stage three, which is stopping phase and distribution. Stage four is declining phase and capitulation, right? So these stages, right, is basically how we should try to determine where the market is, right? So whenever we open a chart, we should try to understand what stage of the trend at the moment, right? So this is basically a basic and the most important thing for us to use SEPA approach, right? Second thing is under the same topic of trend is basically uh, to select a good counter, to select the super performance counter. Mark Minervini like to screen counter, he like to filter counter, he like to see counter that is within the stage two, right? Or just break from stage one, right? Entering stage two. So he tried to find a stage two counter, right? So he have his own screener to do that, right? Um, but point is he to find a good super performance counter, he look at counter that have a characteristic of stage two counter, right? So that is first thing, right? Second thing is you look at fundamental. So fundamental is basically you need to look at the fundamental of the business. At the same time, you need to also look at the macro perspective of economics event, all right? And that led to the catalyst. So catalyst is basically what happened in the world, right? Sorry, not just what happened in the world. It's basically catalyst that can push or pull the price, right? Things that can push the demand and supply, can think that or news or event that can push and pull the sentiment in the market. So, for example, right, catalyst is the earning result is coming soon, right? Quarter report is coming soon and whatnot. So that is one example of a catalyst. Okay, another catalyst is when a certain event happen, right? This might lead to a better price or a trending commodity price, for example. So that is catalyst, and understanding the catalyst that might move the market, might move the company, the counter that we want to trade is very important, right? Number four is entry point. All right. So entry point, like I have mentioned, so basically Mark Minervini, he want to look at stage two counter, right? So this is stage two counter. So let ignore the stage three and stage four. So how he identified an entry is basically by looking at VCP pattern, right? So this is one of his technique. He look at VCP pattern, which is volatility contraction pattern. So here, for example, we can see volatility contraction pattern. Um, yeah, can see volatility contraction pattern here, right? So this is volatility contraction pattern that appear in stage two that also happen to be the base one, the base number one. Okay, so according to him, this is a good entry point. right? Another good entry point is when the price break the stage one. Okay, so when the price break stage one is also a good entry point, right? Provided that it also showing the VCP pattern. But here, it doesn't show a clear VCP pattern, so this is totally a breakout. Sorry, this is totally a normal breakout, right? But here we can see a VCP pattern. So if we see VCP pattern, which is the uh, the volatility getting contract, right, towards a very tight point of entry and exit, right, very tight point of support and resistance. So that is what we call as VCP pattern, right, VCP, right. So um, so if we miss the first entry, for example, right, we can always find another base, right, and hopefully it also provide the VCP reading, right, with VCP pattern that we can enter as well, right. Uh, from my own perspective, any pattern can help in this, can help to enter to enter the counter in stage two, and write the trend, right? Write the advancing phase, which is the stage two, right? Next is exit point. So how he determined his exit point. So he basically, this is one of the technique that which is simple to understand. He basically said that, all right, in stage two is basically there is base, right? So when counter creating a, uh, counter creating a base like this, right? Counter having a profit taking where the price from a super strong momentum uptrend become a um, little bit retrace, right? They retrace for profit taking, for short profit taking. So that will form a base. Okay. So in stage two, normally there will be, I mean, there will be a lot of base in stage two. So, according to Mark Minervini, right, he said that base one and base two, right? So that is basically the best entry point, right? So if you find entry in base one like this, right? Entry point in base two like this, right? So this is basically his a good entry point, right? So base 3 and base 4 is also okay entry point, but a little bit risky, right? You have probability to reverse, right? Sorry, right? And base 5 and base 6 is basically most of the time is a top base where market already exhausted. But not to say we cannot enter the position, but when we identify the market is already at the base 5 and base 6, we need to be more careful. We need to do, have fast in, fast out mentality, right? So when we see the base 4, base 5, base 6, right? These bases that have a high probability of reversal, high probability of forming a stage 3 of topping phase or distribution phase. We need to be more careful, and from there we can use our technical parameter to set an exit point, right? So for example here, let's say we enter the counter in base 1 from VCP reading here, right? And we see base 2, we can hold the position as long as the trend is still there. When we see base 3, we can still hold the position as long as, the price and trend is still there. Base 4, we need to be more careful, but we should hold as long as the trend is still there, the parameter is still there. But once it break out the base 4, right? Once the base 4 break out forming lower high and lower low, that is basically like a signal of topping phase or distribution. So we may decide to take our profit. Okay, so when we take our profit, normally it will be followed by the stage 4, which is the declining phase, right? The capitulation phase where the market will go down, and the same thing happened. Stage 1, stage 2, stage 3, stage 4 in a downtrend, but point is, right, this is basically how he understand and how Mark Minervini approach the market in technical analysis. You look at trend, fundamental, catalyst, entry point, and exit point. All right. So that's all my sharing. Thank you.